Pleasure to be with you and a pleasure to be with one of our two co-hosts. Mr. Clark should be joining us here momentarily, but we do have the man of the hour. No, just kidding. I joke with Dwight because he's like, okay, where's Aaron at? He's got to talk about this. Like, I got this handled if Aaron has some issue or something. Dwight Millard of On Q Home Loans. How are you, my friend?
I'm doing good, John. How are you today?
A lot better than the last couple days.
Yeah. Better week, right? Better week than last week.
Dwight, it's only Tuesday now. Come on.
Okay, you're right. You're
really optimistic.
Okay, but John, I was traveling, so it sounded like to me that Powell said some positive things. Am I reading it wrong?
Yeah, yesterday, it was just more of the same. He just didn't say anything wrong. How about that? He's, and again, this was all yesterday. He said he was concerned, or not, getting a little bit more concerned about inflation, which, geez, no kidding. Everybody else is, but he hasn't been. And, we've learned that in the last couple, Fed meetings and things. Oh, no, inflation's fine. It's transitory and all the normal things, and now all of a sudden they're concerned about it. But it's just more of the same. But Dwight, that was yesterday, my friend. We've got to talk about today. But first, let me tell you what we have lined up for you after we get through the stock market recap. After we've, of course, get through the mortgage rate side of things, et cetera. Of course, this quarter is long and gone now. The first quarter of 2026 is long gone, and we are glad to see it go. It was a rough one, as you'll find out here, and especially in Dwight's world, the world of rates. I had some pretty significant movements over the course of the month, primarily. January and February weren't bad, but boy, month of March just took the entire quarter. But before we do that, let's get into what we're going to be talking about today. So I had a really interesting phone call, Dwight, yesterday. And this is actually what prompted me to talk about this, because I'm like, you know what, this is a great issue that we need to bring up, and that's one good thing about all of us being in the trenches each and every day. We're dealing with real life situations. So here's what happened. Excuse me. I got a phone call yesterday. I had an appointment yesterday with one of our dear clients, and he said, "Look, we're thinking of selling one of our rentals that we own free and clear to one of our adult children, right, as a family." And so he had a number of different questions and things that we went through. And I started to think back a little bit, and I'm starting to get more of these type of questions about, like you and I and Aaron, talk about all the time, from the standpoint where, people have homes, they've owned them for years. I don't know how many years, but they had a $80,000 cost basis, and this thing was worth north of 350, 400,000. So I think they've owned it for quite some time. But you're seeing that where a lot of parents, again, folks, you got to remember one thing: we've got a massive wealth shift that is going on, that is going to be going on for about the next 20, 22 years, where $125 trillion. Let me repeat that: $125 trillion of wealth is going to be passed from generation to generation. And so you start to see situations like this where you're like, yeah, I could sell the house. I don't really need the money. I don't want to pay the capital gains, the depreciation recapture. And we all know, of course, Dwight, that it's such a difficult time right now for young families to get started and try to save up, and much less, try to get a home. So what parents are doing right now is they're going, hey, let's just work out a deal. Let the kids buy the house from us, right? We don't really need the money. We're not going to give it to them, but we don't really need the money. So this is what we're going to be focusing on today. Do you sell it to your kids or you don't? Okay. So if you're thinking about selling your rental property to your kids, it sounds really simple on the surface. But let me tell you this, as I went through with our client yesterday, one wrong move, just one, and there's a lot of steps in this whole process. One wrong move could trigger some massive taxes. It could trigger IRS penalties. Worst yet, as I told the client, it could trigger IRS audits. And of course, destroy a lot of things like your stepped up cost basis and many, many issues. Bottom line, if you don't do this right, there's a lot of cost, expenses, and frustration that can hit you, right? You've got it in your heart. You want to be the great guy and the great mom, the great dad, and you want to pass this house over to your kids and let the grandkids grow up in there. Phenomenal intentions. But again, we're dealing with money, we're dealing with things that have capital gains, and we're dealing with taxes, et cetera. So again, we've got to understand everything that's associated with it. So what we're going to do today, we're going to break down how to transfer the real estate to your children the right way and how to avoid the costly mistakes that a lot of people make. Okay. So this is going to be again, a really, really interesting subject that we've got going with this, and we'll be delving into it. But Dwight, before we do, I need to get to some breaking news that just literally came out at 3:01. I haven't even had a chance to read the article because it came right when the show was starting. So here's what we need to talk about. And of course, the story just disappeared on me. Let me see. Bear with me 1 second. You know what, Dwight? Why don't you go ahead and hit the rates real quick? I need to find the story. It just literally disappeared on my screen.
Yeah, well, that's going to be some good news, John. So we'll talk about some good news, right?
Yes.
Yeah.
Yes. Exactly.
So I mean,
okay.
We were talking.
Let me interrupt you.
You got it?
Let me interrupt you. Okay. Yeah, I got it. Yeah, I apologize.
Yeah,
I want to get this out. So again, folks, this came out right at 3:01. The president said that he expects the United States military forces will leave Iran in 2 or 3 weeks. We leave because there's no reason for us to do this. That's what he just told reporters at the White House. He says, we'll be leaving very soon. Look what's happening to Iran, Trump said. I mean, we're totally unchecked. Everything's been bombed out. That's it. That's what he just told reporters. So you mean to tell me we've been over there this is week 5 of the war. All these lives have been lost, property destroyed. Haven't heard anything more about nuclear weapons being destroyed. We don't have the Strait of Hormuz. And so we're just going to back out. Does that seem kind of
it doesn't sound like his MO, John. So I don't know. It feels like it's
really, really strange with it.
He's throwing a curveball over there.
Yeah.
People are going to chase it.
I haven't even had a chance to research this. Mr. Clark, welcome to the show. Thank you.
Howdy, sir.
Howdy, sir. You just joined us. I was sharing that story. What's your opinion on that, Aaron?
The Trump thing?
Yeah, the Trump thing.
I think that per usual, we still don't have any answers.
Yeah, that's very, very bizarre. Yeah, leaving 2 or 3 weeks.
Yeah, it feels like you're leaving out some punctuation when you read it.
Well, I mean, they've been begging though, John, for answers of how long this is going to go on, and I'm not saying that's the right way to do it, but they've been begging for how long we're going to be here.
But there's no reason for us to do this.
But it doesn't really specify anything that has any sort of clarity as to what is behind that.
No, it's absolutely bizarre here. Yeah, I'm kind of speechless, guys. I apologize. That doesn't happen to me very often.
From that coming out, are you seeing markets reacting to what he just said?
That's exactly where I'm going right now, Aaron. You just took the words right out of my mouth. I'm going to go. Then the futures just started trading right at 3:00, so they're new. Dow futures are down 19, Nasdaqs are up 10, and the S&Ps are flat. So no reaction yet. Still very early, but. Yeah, I'm going to dig into a couple of other news sources during the break and see if we can get some more details.
Maybe it just puts like kind of an end in sight, John, maybe I don't know. It doesn't sound right to me either.
Something doesn't sound right. Yeah, that's what I'm saying. The whole thing doesn't make any sense here. Oh, well, okay. So, Aaron, I know you just joined us. So
Yep.
Once again, this topic is a lot about you. It's a lot about me. We're going to be talking the taxes. We're going to be talking the real estate side. Again, selling our rental property. Again, we're going to focus not on the primary home, but on the rental properties to our children, right? All the rules that we need to follow. Okay, Dwight, let me tell everybody what this market did. And then as soon as we get back from this break, Dwight's got a lot to tell us about the mod market side of things today. So let's just kind of wrap things up at this point. As far as, like I said, we put the bow on the stock market for the month and for the quarter. And, frankly, pretty incredible day today. It was the algorithms that went haywire for one time on the upside. Very, very strong day. Was a 125 point gain on the Dow, 2.49%, closing at 46,341. Nasdaq gained 796, 3.83%. S&P up 185, 2.91%. So, like I said, gave us a little bit of boost to put a little bit of a dent into the into the quarter and so on and so forth. But we still had some pretty good damage done, like I said, on the quarterly basis. We'll hit those quarterly numbers, the monthly numbers. We'll get into the big move in the bond market for this month, and then we'll get ready for our topic. Sell it to your kids or don't. The smart and costly ways to transfer rental property with Aaron and Dwight. Let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH. Happy Tuesday to all of you. Joined, of course, by Aaron Clark of Edge Realty and Dwight Millard of OnQ Home Loans. Once again, an outstanding day today. 1,125 point gain on the Dow, 2.49%. Nasdaq rose 796 points, 3.83%, and the S&P up 185. I'll make it really brief because I want to go back to this breaking news that just happened where the president announced that we're going to be leaving Iran in the next 2 to 3 weeks. Folks, I'll break it down really simple here. It got started overnight. Again, I'm assuming it was overnight because it was either overnight or very early this morning, because I checked things at 3:00 this morning and this news had not broke yet. Matter of fact, futures were down considerably when I went to bed at 9:00 last night. So somewhere between 9 p.m. our time and 3 a.m. this morning, the president made the comment. He said, there's a willingness to end the U.S. military operation in Iran, even without the Strait of Hormuz opening. Everybody got excited. Then kind of mid-morning, the new Iranian president, I guess you can say he's new, also signaled willingness to end the war. Didn't see any news sources quoting the Iranian president. It was very, very vague. So, like I said, it all came down to that. We had a big pullback in oil, down $1.77 to 101.15. Gold up 122.50 to 4,679.50. Dwight, let's hit this bond market. I got some stats for you, and I want your comment on there. So for today, we were down 3 basis points to a yield of 4.3, and I'll get back to this breaking story, folks, in just a second. Down 3 basis points for the day, 4.3%. The month of March up 35 basis points, and for the first quarter, up 14 basis points. So obviously, we just got to focus on the month of March, Dwight. I mean, almost 0.5% in 1 month. My goodness. All right, take it away.
It's been a lot of action in the pit, right, John? So let's go back February 26th, Thursday night. We talked on the radio. We broke that 6% threshold to 599. So that was just basically 4 weeks and 2 days ago. We have, and remember last week on Thursday we were almost 6.7. Right? So I mean that's almost 3/4 of a percentage point in actual rate in 4 weeks. So today, though, you had a good pullback yesterday and today. You had 8 basis point decline, 6.47. So you were at then 6.55, which is down from the 6.7 we had. So we've had some consecutive days to give us some relief. The 30-year FHA and VAs, John, went inside of 6. They're at 5.97 and 5.99 respectively.
Okay.
I mean, this is good momentum. Will it stick? Can it stay? I hope. There's a lot of people, I don't know what Aaron's seeing, but there's a lot of people out there. I don't know if they're kicking tires or looking at carpet samples or cabinet samples. I don't know, but there's a lot of people out there. So maybe we can convince some to jump off the fence.
Yeah. Tell us what you think, Aaron.
Yeah, I'm totally in agreement with that. I think there's still some people that are being cautionary moving forward, but they're antsy. They're ready to jump in the market. So I think if we see these rates continuing to pull back a little bit and that momentum becoming the trend line, then I think we'll see buyers jumping right back in as much as they should have before all this started.
Okay. Positive news there, guys. All right. If you just joined us, folks, once again, let me give you this breaking news that just occurred literally right when the show was starting. And that is the president announced that we will leave Iran in the next 2 to 3 weeks. Now, that headline, again, it was very brief. We were questioning it. Now, I want to tell you that was off of CNBC. I went to Bloomberg during the break, and I want to share with you there's a little bit more detail involved in this statement. So, guys, I want to sit back and relax for a second. I want to hit some of these points. So the president said he foresaw the U.S. ending the war in Iran within 2 to 3 weeks, suggesting the U.S. had largely accomplished its military goal and would leave it to other nations to resolve issues with the Strait of Hormuz. Quote, I would say within 2 weeks, maybe 3. He told reporters at the White House just a few minutes ago, we'll leave because there's no reason for us to do this. He indicated that it was possible that Iran could still reach a deal with the U.S. during that time frame, but said an agreement with Tehran was not necessary for the war to end. Now, wait a minute. Let's go back, guys. We had the 15-point plan last week. We had Iran come back with their own 5 points, and now there's no negotiations, I guess? I don't know. Okay. So he said an agreement with them is not necessary. He said the U.S. would leave when Iran was not able to obtain nuclear weapons, and claimed the regime now in power was better than the leadership before the war. Quote, we had a regime change now. Regime change was not one of the things I had as a goal. I had one goal. They will have no nuclear weapons, and that goal has been attained. They will not have nuclear weapons, Trump said. Oil contracts a bit further. Let me go. He says, in regards to the Strait, he says, what happens to the Strait? We're not going to have anything to do with it because these countries, China will go up and they'll fuel up their beautiful ships and they'll leave and they'll take care of themselves, Trump said. There's no reason for us to do it. Hold on. Let's see. I'm trying to find it's a pretty long
story.
John,
I'm surprised because early in the day, he made a comment that other nations should take the strait. I don't. It then goes to tell.
This is the comment. So let me share this with you real quickly. He says, quote, well, I think I think it'll automatically open. But my attitude is I've obliterated the country. They have no strength left. And let the countries that are using the strait, let them go and open it. They'd probably like us to stay, he said. If we don't stay, we're going to be protecting them. We know, they've been there very good. They've been very good. So we're leaving with nothing done with the strait. I don't know, guys. I'm at a loss here, but it's an interesting situation. And, to Aaron's point, how's the pre-market reacting to that? And again, futures just started trading a little bit ago. So let's bear with me as I get a fresh quote on the futures. Still not budging much on the news. Down 30 on the Dow side, up 39 on the NASDAQ, and higher by 2 on the S&P. So nothing major there.
And John, and that kind of news has already been through. Everybody's seen it now, probably, right?
Everybody's seen it. Oh, yeah.
So the wire, so
it broke it. Like I said, it broke at 3:01 on our time. So it's already been seen.
Why do you think it's not really moving too much from that statement? Do you think it's sort of just
the only thing
defined?
There's a couple things. It's a great question, Aaron. There's a couple things. Number one, because it is still relatively, early as far as the futures are trading. We're only 30 minutes into the after hours session. The second thing, this could have been built in. What we're seeing is the market seems to be a couple steps ahead of the president, right? If you noticed, what made the futures jump up? Okay, so you had that news story. Something, as I've been saying, this has been the most difficult market to predict. This has been a market that has done a lot of crazy things. I'm sure you guys read about, I forget what day it was last week, when we had the big massive sell-off in oil prices and the big run-up in the stock market. Well, there was one trade, quote, worth over $1 billion that went long the stock market and shorted oil in the pre-market before the news broke. So my point is, somewhere, somehow, people are finding out what the president's next move is going to be. So that could be one thing, is it's already priced in, as we like to say, Aaron, where, the street has already figured out, like you said, through some of his hints, which, again, that's difficult to predict, because he'll give some hints and then he'll go the opposite direction. So I don't know if that's a real valid one. But today was algo driven. There's no doubt about it. This market just doesn't run up almost over 1,100 points just because we think we're going to get out of there. And so that may be the other issue. The algorithms and the institutional traders look at it and go, hey, we got an 1,100 point gain today on the Dow, up almost 800 on the NASDAQ. So the market's already priced that in, right? Maybe that was the move today. They already priced in what the president was going to say at 3:00. Again, how in the world do they know? Who knows? So that's what
I want to be on that newsletter.
No, you don't, because that's the newsletter that gets you into federal prison. Yeah, you don't want to be on that one, because SEC's already said they're investigating, which they should be.
I'm sure they are.
That story I shared with you. So, anyways, that's where we are, folks. I'm not going to bore you with the big run-ups today. Individual names. Pretty much everything just went through the roof today. With this good market strength. So, the key is, I always say, when you have big run-ups or big run-downs, see what happens tomorrow. Mm-hmm. One day doesn't make a trend. Let's hope it is the beginning of an upside trend, but we will see. You got a brand new quarter starting tomorrow. We got a lot of window dressing going on today with the institutions, where, again, they're scoring up their portfolios and things to make it look like they've owned this or they've owned that, or they don't own this. Some of the names that have been beaten up, some of the big tech names especially. Tomorrow will be an interesting day, and we'll continue to monitor the futures as we go. But definitely some good news if this comes true. But I'm kind of reading the story, I think, like you guys are, one eyebrows kind of raised, saying, this doesn't really make sense, but who knows? Who knows? Who am I? All right, guys, we'll come back and we'll get into our topic. Sell it to your kids or don't. The smart and costly ways to transfer rental property. Let's turn it over to Jack Sabian. He's got news, traffic, and weather. Hello, Jack. Come back to the Jon Sanchez Show on Newstalk 780 KOH with Dwight Millard of On Q Home Loans, Aaron Clark of Edge Realty. Once again, we finished up 1,125. Boy, it feels good to say that.
Yeah.
On the Dow, 2.49%. NASDAQ up 796, 3.83%. And the S&P a rise there of 185 points, or 2.91%. All right. And then, again, if you just joined us, the president announced right at the beginning of the show that he's saying we're going to pull out of Iran in the next 2 to 3 weeks. And we're going to leave the Strait of Hormuz up to whoever. I guess really nothing's going to change. China kind of controlled it. All these countries that we didn't want to control it, they now control it. So someday in the history books, folks, we'll find out the real reason behind this conflict or war. Someday. I don't think it's going to be anytime soon, though, but there's something deeper that we're not being told. All right, let's get to something a little bit more down to earth here. Selling your rental property to your kids, or do you not do that, right? what's the smart and costly ways to transfer this rental property? So I told you I came up with this idea because I had a client call me the other day and we went through all the pros and cons of this occurring. I thought, you know what? Let's share this with everybody. So we're going to go through a lot of issues in this topic. And so listen closely because it's very interesting. So Aaron, let's start off with what are our first 3 ways that we can transfer property when we're talking about, and again, let's set the table so I don't have to keep repeating it. We're talking purely about owning a rental.
Just rentals.
And we're talking between parents. Yeah, just between parents and their kids.
Yeah.
So go right ahead. What's our 3 ways to transfer?
Yeah. So the first way we can do so is by just selling it for fair market value. You own a piece of property.
Wait a minute, Dad, I'm not getting a deal.
Yeah, exactly. I'll give you $10 off, son.
That's right.
So you can just sell it directly to them. You take the cash out, they buy the property, and then they take over whatever the situation is, which would be similar to just putting it on the market and selling it to anybody random, right? Your other way to be able to do it would be to gift it to somebody, and you can do a partial amount. So if you did sell it at a discount, let's say it was worth 500, you sold it for 400 and you gifted 100 and then, gave them a good deal with the rest. You're going to then have a gift of 100 and then sell it as a $400 per sale. And then of course you can do it through inheritance by passing it on. If, like when I die, my kids are going to get my apartment complex or whatever it is. Yeah.
And the big benefit of waiting till you die to do this?
Yeah. So, we're getting right into the goal. Yeah.
We don't have time. We gotta roll.
Yeah. So the benefit of doing it that way is you basically take all of the taxable liability on that property. So if I owned it and I bought it for 200, it's worth 800. So I've got, a large amount of capital gains of 600,000. And then I pass and my kids get it at fair market value at 800. All that taxable base from behind is just wiped out. It kind of resets.
That's right. We call a stepped up cost basis. But the downside is you got to die for that to happen. So
I do.
A lot of people don't like that one.
I don't like that either.
Yeah, exactly. Okay, so let's get into some of the nitty gritty of selling at fair market value, the gift, partial or full, so on and so forth. So here's what I'm sure all 3 of us, I know I've seen it. I'm assuming you guys have also. The discount, right? I want to give my house to my kids, or I want to sell it to them at a very big discount. Like Aaron said, maybe it's worth 6 and you want to sell it to them for 300,000 or 400,000. Well, the IRS is pretty smart, and they're going to say, wait a minute, you can't do this. If you're not selling this house to them at fair market value, then it's either going to be partly a sale and partly a gift or some combination thereof. The bottom line is there's going to be some taxes due on this thing, right? And this is where people get themselves in trouble. They think they can just gift it right over to the kid. So let's use an example. Let's say you sold the home for $500,000. Or let's say it's a $500,000 home and you sell it to your kid for $300,000. That $200,000 of capital gains would be looked at as a taxable gift. That is expensive. You don't want to do that, right? Now, as I explained to my client yesterday, here's the other thing you got to be careful about when you start talking about gifting and taxes and everything else. So remember, folks, when you sell a rental property, you got 2 forms of taxes. You have the capital gains tax, number 1, which, starts, you can go from literally 0% up to 23.3%. And you have what Aaron and I and Dwight like to call the gotcha tax, which is the 25% depreciation recapture tax that everybody forgets about. So it can be very, very expensive. Now, remember, we're selling a rental property, so we don't get that $500,000 tax-free exclusion, right? So you got to pay the capital gains tax. So like I said, the depreciation recapture tax. And again, this is where people get a lot of surprises there. Now, Aaron, let's go a little bit deeper. The move up, the stepped up basis, right? Let's go into that a little bit quicker. Again, we don't like the catalyst of that because it requires death, but Dwight, as you know, you deal with a lot of wealthy people. Mm-hmm. This is a big strategy in real estate, right? People are like, I'm never going to sell anything. I could do a 1031. Right. I don't want to, but I've got massive multi-million dollars of capital gains. So guess what, Junior? You're going to wait till I'm dead. You're going to have a tax-free property coming into you.
Yeah. Yeah. I mean, John, it's very complicated. That's why timing's really good, because I'll tell you in my world how they look at it, and maybe we can respond to this, is that somebody will come to me and say, why don't I just sell it to them and I'll carry back the note? Right?
Which we're going to talk about. Yeah.
Yeah. So I'll carry back the note. I mean, it's still a sale, right? I mean, it's still, no matter that. So, I mean, the other way too, and again, I'm just saying this is, hey, why don't I add my child onto the property and then we'll do a refinance in 6 months or something like that, right? And take me off. I mean, the IRS is smarter than that. So I don't know where that
go down that real quickly.
that.
Go real quickly, because that's not one of our points, but you bring up an excellent point as always. Go down the path of that, putting the kid on and
So either way, whether there's a loan or let's just say you go down and you add them. I mean, in my world, you have to be on so they're going to look at the date down when you were added to the title as a borrower or as a member of it,
owner.
and then an owner. And then after 6 months, you have the ability to do a cash out refinance and take the parent off. I mean, so you could,
but
again, I don't want to get in deep weeds here because this
but that does nothing as far as the capital gains and gifting and all that stuff, though.
Agreed. But does that delay it? Does that push it out?
Only if we get into the installment sale, which we'll talk about here in a second.
Yeah.
That's the key to this whole thing.
Yeah.
So Aaron, let's go to point number 5, the seller financing strategy, right? Back to my example. This happens a lot. Parents own the house free and clear. It's been a rental for X number of years. Take it from there.
Yeah, so from being able to do that, you basically have the parents where they become the lender. So they are the lending institution, so they can usually give some sort of, they do usually give some sort of a little bit of a benefit there, but they're collecting that monthly residual income for the property. And keep in mind that the IRS will look at the rate that they give them. So you can't go in there and say, oh, I'm going to give Johnny a 3% interest rate when we're sitting on a 7% interest rate market. When I say a little bit of a break, you can do things like what I see a lot of my clients do is they'll do like a deferred start, they'll do it as an amortized longer loan, like because they're not regulated by Fannie Mae.
10 years with
do whatever you want. Yeah, exactly. And interest only for the first 3, whatever, so they can get on their feet and get situated. But the great thing for the parent is now you've created, let's say you just do a standard 30-year at a decent rate, 6% or something like that. You're guaranteeing that retirement income for 30 years. It's coming off of that property.
Okay, so let's go real quickly into a bit more of the weeds, to use Dwight's term. So when you're establishing the interest rate, again, mom and dad are going to carry the paper. When you're establishing the interest rate, there's 2 things you need to think about. So the IRS says that you have to look at, or you should look at, what's called the AFR, which is it's a monthly national rate that the IRS or Treasury gives us, and it's used basically for private loans, right? I had to look at it yesterday. It was a little over 4%. I don't remember the exact amount. So pretty low.
Yeah, it's still discounted.
My client's like, well, we can give, essentially a 4% mortgage to the client. I said, no, you can't, because they expect you to add something to that. So in my experience, and this is why, again, folks, always run all of this in front of your accountant before you ever consider selling a home, gifting, whatever you want to do, run it past your accountant. What I've been taught by a number of accountants I've worked very closely with over the years is you don't really want to use the AFR rate. What you want to do, and Dwight, we brought you up in the conversation yesterday. We looked at Mortgage News Daily. We took the 30-year rate, and I said, come in a little bit below that, right? IRS isn't going to, right, Aaron? IRS isn't going to, complain.
You don't want to always be at the bottom or the top. You want to be somewhere floating in the middle.
Right. I said, I don't think they would have any problem, check with your accountant, of offering, say, 0.25% below the national 30% or 30-year mortgage rate. There's nothing wrong with that. But the minute you start giving them a massive discount, even at AFR, which again, you're talking roughly 2% below the national 30-year mortgage rate, good luck. Here comes the audit. You don't want to do these type of transactions, folks, are red flags for the IRS. You need to make sure all I's are dotted and T's are crossed. You need to make sure your accountant's 100% behind it. And, again, you follow the rules, because everybody wants to help their kid out, but you have to follow the rules, or you as the parent are going to be the one that's paying the penalties and the IRS audit and so on and so forth. So be very careful. We have a couple more things we want to touch on when we come back. Let's wrap it up with Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on Newstalk 780 KOH with Aaron Clark of Edge Realty. Mr. Clark, your phone number, sir?
673-6700.
Dwight Millard on Q Home Loans. Phone number, my friend?
240-2022.
All right. Sorry we had to rush through this, folks, but again, had that breaking news. And again, we're talking about the proper way to sell your home, your rental, to your child. Okay. If you have any questions, by all means, reach out to any of us, and we'd be more than happy to guide you on this. Just a quick update on the futures. Once again, the president at 3:01 this afternoon, when we got the news story indicating that we're pulling out of Iran in the next 2 to 3 weeks is what he says. And we're leaving the Strait of Hormuz up to whomever. Dow futures right now down 28. NASDAQs are up about 49, and the S&Ps are higher by just 3. Okay. So let's get hustling here, guys, and make sure we hit some final good points here. Let's talk about the seller financing strategy, guys, because this is one thing, again, where you got to know what you're doing. And again, obviously include your attorney, your CPA, etc. But, we were talking about capital gains issues, and let's hit this one more time. If you as the parent carry an installment sale with your child, this can really spread out the tax liability. So for example, let's say you carry a 10-year note, right, with a balloon due at the end of that. So you just need to claim 1/10 of that capital gains and depreciation recapture each year for the next 10 years. If you do it for 30 years, you claim 1/30. So the strategy a lot of accountants will do is they'll say, carry the note for little Johnny, for 30 years, right, Mr. Client, because you're only going to be, paying 1/30 of the capital gains and depreciation recapture over that time period. So again, this is where a really good accountant and financial advisor will come in and help you, guide you through the strategy. We, of course, want to make sure this rental property. Now, remember, you're now, Aaron, let me ask you this. Mom and dad sell it to Johnny. Mom and dad are still on the deed, right? They're just like the bank. They're still on the deed. So they still have liability issues. If the little Johnny decides, like you said, to become a Coke freak and throws a bunch of parties and someone gets crazy and, hurts themselves, they can still come after mom and dad, right?
Yeah, I always recommend using an exchange company to manage all that, because then they'll do the foreclosure and everything and report to the bureaus, is my understanding as well, if requested.
Perfect. And we're talking about liability issues. That's something else that you need. Hopefully your rental's already in an LLC, but if not, this would be a time that you'd want to consider doing that, again, because you don't know. We all love our children, but you don't know what goes on after hours or behind the scenes. So like I said, you don't want anything to happen. You've got a lot of equity most likely in that property, and you want to shelter that in the event something does happen. So talk to your accountant and your CPA about moving that into an LO. Remember, on the gifting side, I went over this with the clients too. This is real important to remember. You can gift in 2026, our year, you can gift $19,000 per person to anybody you want to. So a husband and wife, you can obviously gift $38,000 total to little Johnny. But if little Johnny's married, guess what? Now you can give $38,000 to little Johnny and $38,000 to his wife. So there's a lot of games that you get into. And again, this is where you want to get into with your attorney and things to look at the gifting side. Then the tax returns have to be filed, et cetera. So very complicated, but once again, there's all kinds of strategies to do if this is something of interest. Another idea, guys, you just sell the property or 1031 it or hang on to it. And like you said, stepped up cost basis at death. So many issues we can do. So, all righty, boys. Excellent job as always. We will do it again tomorrow on the Jon Sanchez Show. God bless. Have a great afternoon.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited and Equal Housing Lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.